RocketLab, ticker RKLB, trades around $51, up 100% year to date and 250% in the last 52 weeks. Can it keep moving higher, or is this about to stall out? Now, I've been following this company for a while now, and I gotta say I'm still bullish, but not blind. Because when you look under the hood, the story is kind of wild. Revenue's up 48% year over year. Gross margin jumped from 31 to 42%. And I say that's what scaling efficiency looks like. But there is one thing that I haven't heard anyone else talk about. Rocket Lab, they're not just launching rockets. They're quietly building the entire infrastructure needed to get things into space. Their space systems division sells the parts that everyone needs, the star trackers, the reaction wheels, the radios. So even when they're not flying, they're still earning money. And when Neutron, their reusable heavy lift rocket, finally goes operational, it could completely rewrite how constellations are deployed and who gets paid to do it. That's why in this video, I'm going to break down exactly how those numbers stack up, what the 42% gross margin really means, and a signal I'm watching that I think could show when Rocket Lab could finally turn profitable. Hey, what's up? My name is Rick Orford. I've been trading since 1999, and no, I'm not a financial advisor. That is a good thing. I break down numbers so retail investors like us can make smarter, more confident decisions with our money. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/Ricko to get your 10 stock picks right now. All right, so let's get into it. Rocket Lab was founded by CEO Sir Peter Beck in 2006. Today, they're an end-to-end space company that handles everything from spacecraft to launch and everything in between. And that's not just impressive, it's rare. Because most space companies, they focus on one piece of the puzzle. Rocket Lab, they build the entire puzzle. I mean, their idea is to make access to space reliable and affordable so builders can focus on payload, not the paperwork. And that single idea is what's fueling their rise, right? Because in space, whoever controls access controls the market. Now, Electron is the workhorse that made Rocket Lab the second most frequently launched US rocket, all while running on a, get this, 3D printed battery-powered Rutherford engine. Think about that. A 3D printed battery-powered rocket engine that actually works. I think that's a massive engineering feat. But here's what really excites me. They're also set to launch Neutron, it's a larger, reusable vehicle designed for constellation deployments, higher orbits, and even interplanetary missions, with a payload capacity targeted around 15,000 kilograms. Well, this rocket could change the entire economics of satellite delivery, and that's why Wall Street's watching so closely. Now, for defense companies, HASTE allows teams to conduct hypersonic suborbital tests out of Virginia. In other words, Rocket Lab isn't just about space, it's also about national security. And that is where the big money lives right now. Rocket Lab's Space Systems unit builds satellites and sells the parts everyone else needs. Think like star trackers and reaction wheels to radios and flight software. All this means that they can earn revenue whenever they fly the mission or supply the hardware behind it. And I think that's very clever, right? Multiple streams of income all under one roof. So even if a launch gets delayed, the cash still flows. They also secured a multi-launch contract with the Japanese space company JAXA. The company's also got Photon, which was built for cryogenic fueling, and it was built to test methods for extending mission range and streamlining satellite operations. And that's the kind of technology that makes longer missions cheaper, and cheaper always wins in space. Today, RocketLab has sites across the United States and New Zealand, giving them a blended footprint that supports rapid prototyping, frequent flights, and a long runway of success. So I say they've built to move fast, and in this industry, speed compounds like crazy. But what about the stock? Well, today it sits at about $51, and despite a recent decline, the stock is still up over 100% year to date and 250% in the last 52 weeks. That's a monster move. But when something doubles or triples this fast, my question is, can it continue? I mean, today, RocketLab has a market cap of over 25 billion, making them a major player. Investors today, though, I think they need to expect volatility. I mean, look at their 60-month beta. It's over 2, which shows that the stock really moves around. I mean, this volatility is twice the market average. I mean, the stock kind of moves like a rocket, doesn't it? And if you're not strapped in, well, you're definitely going to feel the turbulence. So the question isn't just, is the stock going higher? It's, can you stomach the ride? Now, the returns are one thing, but the financials, they give us a clearer picture, just as we talk about all the time on my Discord. So let's have a look at RocketLab's third quarter earnings to explain why the flywheel is turning faster. Revenue grew 48% year over year to $155 million. Product revenue was up around 30% to nearly $104 million, and service revenue, well, it doubled to about $51 million. So the product segment is what still carries the bulk of the load, but the services segment is growing fast. Then we have gross margin, which was almost 42%, up from around 31% in the same quarter last year. And that points to pricing and scale. It's aligning in the company's favor. I mean, that kind of margin expansion doesn't happen by accident. It means they're building leverage into every single launch. Now, let's have a look at the bottom line. Net loss came in at approximately $18 million, down from nearly $52 million just last year. So this means that core operations are becoming more efficient as volume increases, even while the company continues to invest in Neutron and their national security programs. I mean, they're spending big now so that they can generate profits later, and that's classic growth stage behavior. Balance sheet-wise, cash and cash equivalents were about $808 million, and when you add the rest, the pool sits above $1 billion. Total assets were about $2.2 billion against liabilities of about $940 million, giving them a debt-to-asset ratio of around 0.42. It just means that the company is more than capable of paying back any debts that it may owe at this moment. And that's what I'd like to see, right? A nice, clean balance sheet with lots of runway for growth. And liquidity, it's their launch fuel. Now, for the fourth quarter, management guided for revenue to come in between $170 and $180 million, with a gross margin on a GAAP basis between 37 and 39%. And when the company raises the bar in the next quarter, like they just did, it usually means the pipeline is syncing with delivery. Their launch cadence is rising, and space systems keep scaling. So it feels like everything's lining up for them. For sure, though, the next few quarters will tell us if this story breaks into orbit. Well, that's it for the third quarter financials. Of course, I'll cover RocketLab and other popular stocks in the future, so be sure to watch out for them, because I'll always cover a side of the story that you probably haven't heard of before. Now, with all that out of the way, is RocketLab stock a buy at these levels? Well, consider that a consensus among 15 analysts rate the stock a moderate buy with a score of 4.13 and a high target price of $83. Analysts don't throw out 60% upside targets lightly. That's a signal worth noting. And I think they're right, but I also think they're looking for a bit more proof. And that's the moment that smart investors pay attention. When the numbers are improving, but the market hasn't fully caught up yet, that's what you want to watch out for. But what about you? Are you with RocketLab? Or are you watching from the sidelines? Let me know in the comments below. And while you're there, if you found the video helpful, don't forget to like and subscribe, because it helps others find the video, it supports the channel, and you won't miss out on any of my future deep dives. Well, folks, that's it for me today in this video. I wanted to thank you so much for watching, and I'll see you next time.